Dividend yield is obtained by dividing the dividend per share with the share price. If you want to learn more about dividend investing and its advantages, you may check my previous video on dividend investing. In this video, you will learn how to improve your dividend investing approach using dividend growth rate parameter. The dividend yield does not always give a true picture because the high dividend yield may be because the dividend payout was high or because the share price has reduced significantly. Hence, it is always better checking the dividend growth of the stock instead of dividend yield. Also, we must be interested in consistent growing dividend income rather than high dividend income for just 1 or 2 years. The dividend growth rate is the annualized percentage rate at which the dividend of the stock grows over a period of time. If a stock has a strong dividend growth history, then it indicates a long-term income opportunity in that stock. Hence, the dividend growth rate becomes an important metric to determine the company's long-term profitability. If a stock has a good dividend growth rate, that also indicates that the company has a strong business model and financials, and it is well managed by its board or promoters, which is also a shareholder-friendly management, giving regular dividends. Moreover, the dividends are distributed from company's earnings or profit, and hence dividend growth rate is a very useful parameter in assessing or analyzing the stock's ability to sustain the profitability. You may calculate the dividend growth rate by dividing the dividend of year 2 by year 1 and then subtracting 1. For example, let us check in Trendline the dividend distribution history of Hindustan Unilever Limited. Search for Hindustan Unilever Limited and select the stock. This will take you to the overview of the stock. Click on Corporate Actions and select Dividend. Scroll down to see the history of dividend announcements. In 2015, the total dividend distributed is Rs 15.5 per share. Similarly, we can see the dividends distributed from 2016 to 2019. If I want to find the dividend growth rate of Hindustan Unilever Limited from 2018 to 2019, then it would be 24 divided by 20 minus 1, giving 3% growth rate. The CAGR, or the compound annual growth rate of the dividend growth for 5 years, can be calculated like this. The annualized dividend growth rate of Hindustan Unilever in last 5 years is 9%, which is very good. Dividend growth investing not only looks at the high dividend paying companies, but also checks whether the growth rate of the dividends is consistent and increasing. If the dividend growth rate is equal or higher than the inflation, then it can be a very good passive income beating the inflation rate in future. We should check at least 5 years of dividend growth history while picking the stocks. Let us try to list down all the stocks that have a dividend yield of 3% or more every year and the dividends are growing consistently. Go to the screener. Let us write down our query by giving the condition dividend yield greater than 3% in year 1, 2, 3, and 5-year time frame. Now let us add the condition for positive dividend growth rate in last 3 years. I'm adding the condition that dividend of last 1 year is greater than dividends in year before that, and so on up to last 3 years. Also, add the condition to restrict the list of stocks to large cap and mid cap. Now execute the query. We got 17 stocks matching these criteria. Let us sort as per the market cap to get the large cap stocks on top. You can now see the top large cap stocks that generate dividends more than 3% per annum and also whose dividends are consistently growing in last 3 years. Hope this has given you a good understanding about dividend growth rate and its importance in dividend investing. Subscribe for more useful videos related to personal finance and stock market investing. Thank you, friends.